We are 9 years into this bull market. Can the markets continue to move higher? Let's bring in Doug Butler, Director of Research at Rockland Trust and Chief Investment Strategist at Yardeni Research. Ed Yardeni is here. Ed is out with a new book, Predicting the Markets, a professional autobiography. Good to have you here.
Thank you very much.
Got the book here on the set.
That's it.
Looks like nice bedtime reading. Yeah, nice piece.
I hope it doesn't put you to sleep.
No. Nice piece in Barron's over the weekend.
Thank you very much.
Headline: you think this market can go higher?
Yeah, I do. I mean, you know, the reality is I've been doing this for about 40 years now, and when I started, the Dow was 1,000, and now it's 25,000. So the trend has definitely been your friend, and that's mostly because earnings just keep growing in a growing economy. Yeah, I think the market can continue to go higher along with earnings.
You're not wringing your hands over trade like so many other people are?
Not really. You know, this may be wishful thinking, but I think the president is very much into the art of the deal. He likes to negotiate, likes to take extreme positions, and then he likes to see how the other side, you know, meets him halfway, if they meet him halfway. And if they don't, then he blusters again. But I think he's really shooting not to eliminate free trade, but to really make it fair. And I think it would be, it would be a misperception to say that trade is completely fair. I mean, we are taken advantage of in a lot of areas. So blowing the whistle and saying, you know, we need to do this on a more bilateral basis so that we can renegotiate these things as needs occur, that's not a bad thing.
Doug, how do you weigh the risks at this point? And we are in a rising interest rate economy. There could be a fourth interest rate hike later on this year or early into 2019. We've got the potential risk of a trade war. Valuations are kind of full right now. So where do you stand on weighing that all out?
I think you do weigh it all out, and you really, at Rockland Trust, we really focus on what the needs and goals of objectives of our clients are, and not sort of what we think is going to happen over the next 6 to 12 months. But really, one of the things we're focused on is thinking about what could go wrong. And, you know, Dr. Yardeni said, you know, I'm comfortable with the trade talks, but really concerned that he takes it a step too far and we do get a full-scale trade war. And that, you know, those are the risks on the horizon. The risks on the horizon of the additional rate cuts, the Fed's continued fears around, you know, setting an inflation target and maybe over-tightening to avoid it. But those are areas where if we look 12 months out and we're down in a bear market, those are the things that could go wrong.
Well, that was what I was going to ask Ed, Doug, is if trade, in your view, isn't going to trip this market,
right,
what could? And how soon?
Again, having been in this business for 40 years, I've come to the very obvious conclusion that bear markets are caused by recessions. We had one bear market in this 40 years that was not caused by a recession. That was in 1987, and that was basically a portfolio insurance flash crash. And we've had a couple of these little flash crashes, and the last one occurred in early February, and it was all of 10%. It was a correction. It wasn't a bear market. So it would have to be an event, in my mind, that causes a recession. Now, protectionism can do that if it goes wild. But then Ronald Reagan was a protectionist, and it didn't get to the point of causing a recession.
And we don't have a ton of history recently,
right,
because the trend has been toward free trade as opposed to protection.
Right. I think there's just so much money that's being involved in globalization. And I recognize that globalization has created some income inequality, but on balance, it's created a lot of equality on a global basis. I mean, I was just in Southeast Asia on a family vacation at the end of last year, and the amount of, you can basically see the prosperity that's evolving in a lot of these places. So globalization has been net a big positive for the global economy and certainly for the stock market. Take that away and we got a problem.
So, Doug, you did sound concerned about some of these issues. I understand that you manage for the individual client, yeah, but are you worried about the market? I mean, are you encouraging people to get some cash on the table here in case of a sell-off?
We've probably encouraged people over the past year to take some of their winnings off the table, but really I think, you know, Dr. Yardeni talked about it right, in terms of globalization has in general been a very good thing. I think the question is, you know, in terms of trade policy, you know, is Trump Reagan or is he Herbert Hoover? And we're hoping that he's more Reagan-esque. But, you know, really thinking about what could go wrong. And so those are the areas. Geopolitically as well, in terms of, you have this issue, you have issues in Korea, you have issues, you know, President Xi becoming president for life may be something that, you know, is a known unknown in terms of problems that we'll face in the next 12 to 18
Well, Doug,
months.
Secretary Mnuchin assured me that President Trump is no Herbert Hoover last week, so I'm sure that eases your concerns.
What a relief.
What a relief. And so we talk a lot about valuations.
Right.
Melissa talked about how full the valuations are. You're comfortable with that? How much more are you
Again,
willing to pay?
I've tried to
Given
keep
the
things-
risks on the horizon,
Yeah.
and you talked about the risks individually,
Right.
but collectively,
Yes.
they can go a little bit wrong
Absolutely, yeah.
and add up to something big.
No, absolutely. It could always kind of become a runaway freight train, but that's the nature of investing. There's always something to worry about, and sometimes there's a lot of things to worry about, and they can all add up. But, you know, I've tried to keep things simple over the years, and it's really the market just PE times E. It's the valuation multiple times earning. I think the earnings story is absolutely phenomenal. I mean, analysts have just raised their earnings estimates for this year by $12 a share because of the tax cut. Valuation is not cheap. I'm not going to tell you that they're giving stocks away here. But the reality is, with the kind of earnings picture we have and the fundamental of our economy and the global economy doing well, I mean, a lot of this bull market we've had since Donald Trump's been president has had more to do with the global economy, just coincidentally doing extremely well, and it's still doing extremely well.
Good luck with the book.
Thank you very much.
Ed Yardeni, Predicting the Markets. Doug, if you ever have a book come out, we'll wish you good luck on that too. Rockland Trust.
Thank you.